Welcome back, guys. Welcome back. Welcome back. I haven't placed any trades in a while now. It's been approximately 2 weeks. I've just been off the charts. I've been off the markets. I've just stepped away, and I haven't placed any trades so far. And I took my first trade, first trade yesterday actually, and I decided, okay, let me just record how it played out and show you guys how it played out. Uh, I took shorts on gold, and let's take a look at how gold played out. Okay, right. I want us to go through this trade real quick. I haven't placed a trade in a while now. It's been a couple weeks actually, approximately 2 weeks since I haven't placed any trade. So I want us to go through this trade real quick. The trade that I took on gold yesterday. So it's a trade that I took yesterday. So I wanna just record this and show you guys what happened. So what happened as we know that gold has been pushing up for the longest of time now. Gold has been trending. We've been seeing significant bullish pressure within the market, and uh, in my opinion, I wouldn't say I've been waiting for significant highs, but I've been waiting for exhaustion in the market. So let let me show you guys what I saw in the market and what actually prompted me to place this specific trade. So let's get it. Let's get it. So as we can see the market, has been pushing up. I'm just gonna go to my left. The market has been pushing up. Let me just zoom out. Gold has been pushing up. Gold has been, like I've said, gold has been creating significant highs. Higher high, higher low, higher high, higher low, higher high. Gold has been creating significant bullish momentum, and gold has been rallying for the past few months right now. So I saw this higher high, this higher low, which indicates to me a lot of bullish pressures in the market. Uh, and what I looked at is the significant high. This is a quite significant high. It's a structural high right here. This right here is a structural high that gave this bearish reaction, that led to this bearish reaction right there. And so I'm using my Asia range as a framework. I don't necessarily trade off my Asia range depending on the setup, but I don't trade off my Asia range anymore. I'm just using it as a framework. And as you can see, the market swept my Asia high. My Asia high got swept. The market pushed up. The market pushed up significantly. And as we look at in the manner which the market pushed up, let me go to my 5 minute time frame. So when we look at the manner in which the market actually pushed up, we can see that relevant levels of liquidity has been left behind. The market hasn't swept these levels of liquidity. And what do I mean by these levels of liquidity? We're looking at retail levels of liquidity. So I'm talking about break and retest levels, trend line levels, a lot of wiki areas, relevant retail, double bottoms, double tops. These are relevant levels of liquidity, which I anticipate the market should take out. So let me show you guys what I saw. I saw this structural high right here, break and retest. So it's a break and retest, same thing, break and retest. This as well, it's break and retest. So we can see that there's a lot of break and retest traders or retail traders in this particular trade. And we can also look at these relevant lows right here. These are retail levels of lows of double bottoms, if you may call it that. So we can see that a lot of retail traders are involved in this trade. And as we look at these wicks right here, these wicks, they indicate something to us right here, something to us. They're showing us something. Also also relevant level of liquidity. So when we look to my left, I saw this relevant highs, the structural highs which needed to be induced. So these are relevant equal highs in the market, which the market needs to induce before the market then pushes up to mitigate my supply zone, my order block. So what happened was, as we can see, as I zoom in, let me just do this. As I zoom in, we can see the market. We can see what happened. We can see this wick. Look at this wick. You can see, look at this wick right here. This wick, the market wicked into this key area. The structural high actually wicked in, induced this structural high and reacted off the zone, reacted off this structural high and gave some bearish pressure. Now, what would a lot of smart money traders do? They would see this as an engulfing candlestick, and they would see this as a change of character. They would see this as a change of character. Change of character, the market printed a change of character, printed a change of character, order block there, and they would enter straight away. So as you guys can see, I've marked this out because I knew that this would simply just invite early sellers into the market. So early sellers got invited into the market at this point. It's a smart money trap. Early sellers got invited into the market at this point, and what happened? The market actually pushed up, induced, kicked out these early sellers into the market, stopped them out, pushed up, mitigated my order block. As you can see, the market mitigated my order block right there, entered me into the market, pushed up, pushed up, and the market actually hit my take profit. So I placed my take profit around about this level 127. However, I closed early. I closed out trades quite early. I got out early of this market. But the market hit my take profit, which was around this key level. This key level right there. The market hit my take profit, and I'm out of this trade. This one trade almost placed me placed me back at break even. I'm just literally down 1% right now on this account. I'm down 1% right now, and I haven't placed any trades in 2 weeks right now. So this is the breakdown that I wanted to show you guys. So let's take a look at my MT5. I've taken some screen recordings for us to look at. So let's take a look at. It's all right. So as I showed the trader that took on gold, actually, as we saw that I made approximately all the losses back that I took. So I was on a losing streak, I think of approximately 6 to 7 trades. Actually, yeah, I was on a losing streak, 6 to 7 trades, and I made everything back in almost everything back in one trade, in one single trade. It's just the commission. So when we look at the commission, we'll see that the commission is approximately 46 to $50, and it's just the commission. But I'm in drawdown of approximately 1%. 1% drawdown. I've made 6% back, 6% back in one single trade, if not more, 6 to 7% back in one single trade. Down 1% on this account. As I showed you guys have seen the losses that I've taken. I took substantial amount of losses. I was in a losing streak. I've recovered it by one single trade, and that's just how the market goes. Like I told you guys, that when you know that your edge will play out, it happens. Your edge plays out over a long period of time, and you just need to have the cojones. You just need to have the chutzpah to actually stick out for that long, stick to the plan for that long, and eventually things will play out. So yeah, that's the trade. I've recovered. It's NFP today. I don't know if I'll be on the market, but I think I'm done for the week. I've taken one trade. I'll probably be back on the charts next week, but yeah, we are still doing the challenge from $5,000 to $10,000 a month. So if you're new to this channel, hit that like button, comment down below, subscribe, and I'll definitely see you guys in the next video. Cheers, family.